Hey folks, what a view behind me. I'm at Blackpool Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackpool Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackpool Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Good morning. Good morning, guys. How are we? How's your weekend? You guys hear me all right? Oh, yeah, cool, sweet. All right. Sorry, running late. Cool. All right, let's have a little check-in. We've got 10 minutes, 10, 15, 12 minutes actually, before London opens. So just a quick little scan of the old news. We don't have any scheduled news apart from like these lower impact ones. We're going to have probably some headlines regarding, I think they're doing like some of these leaders are getting together to discuss this, what happened over the weekend. So there might wonder if there's any development over that. Whatever that happens, that'll be unscheduled news. So that could come from anywhere. But hopefully we have a fairly easy ride. We've got US news in the New York session. So pretty minor scale of the high impact news, retail sales, and then the New York manufacturing index. So they are expecting some good numbers, positive numbers. What was April's one? April was -1%. Oh yeah. So year on year then would be looking pretty good. Be pretty hard to not have year on year going up. So it just depends if we're seeing a trend of previous getting reduced by forecast. If month on month is going down, but you can see they're kind of all over the shop. We've got tax time in the US. So depending on when people get their tax returns, maybe they go and spend stuff. So who knows? Who knows what kind of read we'll get? Financial juice. We can already see, starting doing these sanctions against Iran and people just, talking about what they should do, not whatnot. Can't be good for equities. So for equities, I'm looking for sells. For gold, I'm a little bit cautious. So I'll tell you why I'm a bit cautious for gold. But you would find is the pink line. We've got a discrepancy here. GMT1. I think this is the one I want. So let's add it to a tile layout. Remove that. Remove that. Remove that. Okay. Should we back to business now? Equities. Looking for sells. You can't hear me? Oh no, YouTube can't hear me. Should be able to hear me. Or am I being trolled? Ty, can you hear me? Hi, Richard. I'm back now. Okay, I don't know what's going on. All right, now, we've got to be careful here. One, we've got to, especially in some of these US indices, is that we had a huge sell-off on Friday. Huge sell-off. We've got earnings. We've got Q1 earnings coming out. I need to look at the calendar to see what's coming out today. But Friday, we had some earnings with the banks. Everyone will pass the earnings generally, but how much they pass by is going to lead confidence for like quarter 2, quarter 3, quarter 4. At the moment, there is you guys have heard of buybacks. Is anyone unsure what buybacks are? So buybacks. So you have like different times a year when businesses, they can buy back shares. So basically, like what they do is, say one of the major ones that we had, if you're buying back shares, you theoretically are reducing the amount of shares available. So the value of each share then would go up. That makes sense. We had a huge one with Meta that, remember when they exploded to the upside a few months back? So when they released their earnings for quarter 4, they've never paid a dividend, and the dividend is basically like an interest payment on how many shares you owe, and that's really positive for investors. They love that. So at the same time, when they announced their earnings back over here, what they released was that for every person that had a single share, they were going to get 50 cents, I believe, per share, and at the same time, they were going to buy back shares. So that means that not only did the value of shares go up, but everyone that held or holds shares start getting an interest payment on those. So it also leads to a demand. So we saw Meta at the time. At the time, this was the biggest increase in market cap ever. It went from just underneath 400 and opened and closed on that day $60 per share higher. And they've got, there's a lot of shares out there. So this added, I think, something like 200 billion to the company's value or something like that in one day. Like that's crazy when you think about it. That's like more than some country's GDP that they just added on one day. So the buybacks are really powerful. So when they do buybacks, typically it does prop the business up. And you can imagine, like, from a transfer of wealth, if businesses can secure low levels of, say you were the CEO and you had access through corporations and banks to obtain cheap levels of funds in terms of like loans and business loans from banks. If you could borrow a bunch of funds and then use them to buy back shares, and you own like a good stake in the company, then personally, this CEO that made a business decision for that business to borrow the funds, they'll use those funds to commit some buybacks of shares, and then those shares will go up in value, and the CEO's personal ownership of this company will then also increase. You can see how that works. So you can really see how, like, as a transfer of wealth, the stock market and CEOs can do these things. Now, at the same time, there's only windows where you can do buybacks, and currently you're not in a window. So that window's been closed for a bit while they do all the earnings and things. So until that window gets reopened again, you may see one of the drivers of that helps promote and keep on the stock market pushing up is you've got one less driver to help the market continue going higher in terms of like valuations. So while that window is closed, there's no opportunity for buybacks. So we may see market correct a little bit. That's just one thing. That's just one factor. Other factor is that interest rates are still high. We've got inflation proven to be sticky. They got a bit of a realization with CPI last week. 3, we've had threat of war over the weekend and unrest in the Middle East. And if unrest occurs in the Middle East and that leads to a spike in oil prices, then that's also very negative for stocks. So I'm very cautious about any further legs higher based on fundamentals. And one thing, though, that does make this a bit murky is it's kind of annoying that last Friday got the longs for here to here. So we did take this in the stream. We did trade up from basically here up to here, and then took a little sell from here down, but I thought we were going to have another leg higher, so I didn't actually hold that sell, and it proved to be left a lot of pips on the table. It was a pretty clear area to be looking for sells from based on the 4-hour chart. Okay, we've got a lovely descending channel through here. Really beautiful sort of reaction, quite nicely anticipated. Actually, it's not here, but he was calling it as well. And I was really hoping that would get that sell-off from here. I was really hoping we'd get a wick like that. Now, what we need, 3 things for a confirmed break to the downside is if we zoom out just a touch, we've got an area of where we've accumulated. So lovely accumulation. Price has come down on the back of the CPI news, where price really dropped. We grabbed liquidity from underneath this accumulation area. We had a lovely little pullback, bounce back up into a deeper price point of interest. And then I wanted to see price close underneath that wick. It never did. So that's what leads me to just being a little bit cautious of this level, because that bloody thing never closed below it. It broke it. So I want to lean towards taking sells, but for this purposes of this this scalping session, for the next hour, it makes sense. That's the difficult thing. Does it make sense to be looking for sells in the next hour? Or should we be looking for sells from a deeper price area? Of course, we should be looking for deeper sells from deeper areas. But I would have loved to have seen a break lower. So whether we push up, I just don't know how much we push up. And it kind of sucks that we just watch price go up and up and up and up and up and up and up. And then think, well, maybe it gets to the end of the hour and a half, 2 hours that we have here for the stream. And if we just watch it go up for an hour and a half, then it would have been, I do like trying to get a trade in this hour and a half to remove the pressure of trying to find a trade later on when I'm got more commitments. But if you're looking for sales only, then really look to the left here and think, where does it make sense to be looking for sells from? One thing is that this here was a complete liquidity grab where it pushed up to down. And where did that liquidity grab start from? Well, you could argue it started from this liquidity candle. So maybe this liquidity candle, just on the 15-minute time frame, maybe this is an area that price would struggle to break we've got liquidity from above these highs as well. So if we saw a reaction at this point, at this pink line, and price, I know we've got clean candles here, which makes things difficult. I'll look higher as well to see if we can see something. But if we do a liquidity grab where we wick up into this area, have a reflexive pullback, and then start getting another reaction at this point, failing to break the high of the liquidity grab, then what I'll be doing is I'll look to sell to try sweep some of this liquidity that we've been building up. And I'll try hunt that idea. So I think it makes sense for a particular trade idea for now, is just to see what happens at this remaining line, to see if we get a liquidity grab and then we see like a resistance created. I wouldn't mind that. If it keeps on driving higher up, let's check the other time frames. 30 minutes, maybe this area as well. This candle tried to be a 30-minute liquidity candle, which just got negated straight away. So that could be another little zone of interest. I'll change the color so it doesn't confuse with some of the other things I've got. Oh, no, I'll leave it. Screw it. 45 minutes doesn't quite make as much sense. We've got a liquidity candle on the 45-minute, a bearish one. That's up in that zone as well. I'll make that a different color. So I'm looking for sells. It's just where we get those sells from. That's the thing. The one that was on the other time frame. It was the Tokyo fix. So that's 2 a.m. Tokyo Tokyo time. 2 a.m. UK time. Sorry, UK time. Not so much for German. It's just part of the indicator on gyms. There's more for gold. Is that at that time of day, the Tokyo, you've got US dollars fixed at a specific rate for until the London fix, which is at 4 p.m. London time. And when they fix the US dollars, all business exchanges that when you go and if you make like a purchase online, it's tied in with that price that was set at that time. And so when price moves away from that line, let's just say this is the line, and that you'll be buying whenever you make it a purchase. Say you buy something from Amazon, whatever, they'll give you an exchange rate, and that's what the rate is set at. But if they get a whole bunch of clients that keep on buying and stuff, and the banks giving you that rate, as price gets further away and they trade amongst themselves at different rates, there's going to be a settlement that they need to do. And so you'll find that price often will find its way back to that agreed price so that they can settle the orders. So it's like a little way that the banks can arbitrage, where they can buy high and sell low to buy low and sell high to customers. There's a study session on it in the G Drive. Yeah, I want to see now. Yeah, I want to see if price fails to close higher. If it comes down, I want to see a pullback, and I want to see price fail to break higher and then start to break down. And then I'd say that this was just a buy to sell. But at the moment, I don't want to buy, what do we call it? A rising bayonet. Yeah, I don't want to get poked into a sell. So we're going to keep an eye. So I was now, which was a 30-minute. This 30-minute candle, which was, this is kind of, you lose the size because of how big these other candles are, but this is engulfed like an outside candle. So this area could represent, decent liquidity above here. So as long as nothing's closing above this level, based on the 1 hours, Still like these levels. Doesn't give me much more. 2 hours. Go on. Three hours, 4 hours. Okay. Yeah, let's see. Let's see what happens here. So I've got a few zones that if this one fails to hold, then can target some higher ones. Buys already gone, so I'm not looking for buys from here unless we get a closure above here, and then it's going to be a breakout buy, which I don't like. I don't like the idea of breakout buys, but may have to adapt. But I like sells from one of these zones. So 4 minutes looking like it's about to come to a close as like a lovely little, looks pretty nice reaction at this point. See if we can close like that. 3 minutes didn't close above the high. Starting to, can we close on? No, not going to close under. Or maybe a 3 minute can close under. 4 minutes now come to a close. Yeah. So the question is this the retest? Hasn't had the reflexive pullback. We haven't had the retest of the pullback yet. While we're waiting here, I'll tell you my case on gold. Why I'm a bit cautious with gold is you would think gold just goes up, and that after the sell-off that we had on Friday, and then the war tensions, it made all the sense in the world why price gapped up. And I'm kind of disappointed I didn't leave a buy order going into the weekend. I didn't even think about it. But on Sunday, I was thinking I should have had a buy order, because if nothing happened, I didn't see gold gapping down. But if something happened on the weekend, I would see gold gapping up. So it would have been nice to have entered the buy position just before they closed to hold over the weekend to see. Now, why I'm a little bit cautious with gold right now is I could see going long makes sense given everything. And there's been, even with that deep pullback, only thing is we've had so much volatility on Friday that price could easily still come down lower into like the 2320s before going back up. And the reason I'm cautious of it fundamentally is that when you do have gold's a safe haven, but so is the US dollar. And if there's anything that's really going on, US dollar does perform really well in these environments, because everyone's a mad scramble to get US dollars. And because it's the business world reserve currency, to make any sort of real meaningful transactions as well right now, you need US dollars. So there could be a sudden demand of grab of US dollars to stockpile some before maybe stuff really does hit the fan. So it wouldn't surprise me to see a leg down before that going up. So that's why I don't want to jump into buys just yet with gold. And the volatility that gold is, even if it did come down to these levels, you can't, it's pretty hard to hold something hundreds of pips, because gold's not an easy play, not an easy trade to hold if it's going to draw down. So I'd rather just wait for clearer signs. And right now, I don't really see any clear signs that price is about to go up without going down first. That makes sense. That's why I'm just a little bit cautious with that one. Okay, so we're getting this pullback now on the German. People that jumped in early on it would be benefiting from, roughly 20 pip reaction from the zone we flagged. I'd be securing something at some stage, like maybe even like, I don't know, around here. I think that would be a good way to start your week, because the chances of it doing like a complete sell-off like this, whilst it can happen, it's kind of sucks to hope that happens and then have price come up, because I dare say it will retest your entry. And retesting your entry when you've been in profit and it hasn't, and you haven't secured anything, doesn't feel good. Neither it wouldn't feel good either if it just drops and you've secured so early. Like I felt that on Friday. But taking something's better than taking nothing. DAX put a buy order a few seconds ago before the close. Oh, you did on gold. Beautiful. Yeah, that's good. That is good. A way that gold can just rally without having that pullback is if the Japanese decide to intervene, and because price has just gone up and up and up and up, and if price just continues to go up, pushing up, and the Japanese do actually, I think, was it Bruce Lee? Yeah, you're saying that you read something that they said at one, like they'll defend 155. So if it does get up to 155, then that means US dollars already gained some strength, which means that would see gold, like depending how strong gold is, that does mean that we, at least US dollars giving strength. So maybe that could lead to US dollar staying, like not US dollar dropping, not gold dropping, but maybe the strength of the US dollar just stops gold from really rising, and it could just stay consolidating here and still seeing US yen get weaker and weaker and weaker. But if Japan intervenes and puts sells some of their treasuries and puts like US dollars into the market, then we could see US weaken with that intervention, and then we see gold rally. So if that's the case, I'd love to be on those buys for gold with that happening. But I'm just a little bit cautious getting into something too early with gold, just because I do see a little bit of cross currents. Now, German's looking lovely, man. Getting close to an area to secure. And start your Monday off really nicely. 15 minutes into the London Open, and should be around 30 pips up. Have executed on this. Yeah, nice. There's steps, got that gap. How many pips was that? There's a lot of pips on gold. Eddie, you got that as well, didn't you? Got 80 odd pips in a minute. Yeah, you got the down. So you had a good weekend, haven't you? Saw the Max Holloway fight, and then you got gold on Monday morning. Oh, Sunday night. No, Sunday morning. Nice. All right, beautiful. Now, who's in this trade? Yeah, great. Good work. Don't know if that was saving things. Thought gold open at 9. No, open at 10. Currencies open at 9. Gold's an hour later. Currencies opened at. Oh no, you're right. They opened at 7, didn't it? No, wait. 11. Oh, yeah, no. Gold should have opened at 8. You're right. Yeah, 8 o'clock it should have opened. Currencies open at 7 Sydney time. Gold now opens at 8. Bipster, what mark is this? This is the German 40. But we covered gold just before. Yeah, it's at 8 at the moment. Got to get my head around all the different changes. Where did you get in on this, Justin? Did you wait for one of these lower time frames to close? Mm-hmm. And you sold from here, closed here. Yeah, that's really good, man. That's excellent. Who didn't close? Or who didn't secure? Because this is the problem. Is when you don't secure, I hate that feeling. I hate that feeling when it comes back to entry, which it does. Now, can we double dip? Go again. It depends if we get another rejection or if we close above this high. If we close above the high, I wouldn't. Yeah, there's no sells unless we see a rejection. If we close above the high, then there's no sells for a little while longer. You could. I find when I switch my bias like that, I usually miss the move. But some people can do it really, really well, really easily. I'm not as plastic as that. Yeah, I find if I do just like sell then buy and then sell, like sometimes I'll do it, but a lot of the time I just feel by the end of the session mentally I've just been in the ring with Tyson and I need a break. So I feel better just picking a bias and then knowing that we discussed this on the weekend about how on these lower time frames the idea is the least important the harder part of this is the timing, is the execution. So if I just pick one idea and just focus on execution, I'll be better than trying to have multiple ideas, multiple executions. One is done as well a lot of the time. Bipster in the trade, not anymore. Not anymore. Coming back to entry, killed my runner. So yeah, that was it. But now, is this the retest? Is this the retest? If the retest can end and we get another, like a double rejection, then a support should break. Because if this higher low failed to make a higher high, higher close, then what's next is a deeper liquidity grab. One minutes gave you a great entry, but then you would have had taken on 1 minute. I don't want to do that. 2 minute, not really. 3 minutes is it looks like it's if you're waiting for a confirmation of the candle closing, then it's dropped. For a scalp, you're entering basically at this little support, which is still not broken. In your resistance, you're quite far away from your resistance, so that starts impacting your risk reward. If it does, sometimes when it moves like this, so far away, you're better off not chasing it, because if it does break the low, the second break means that it'll probably drive a lot lower, and there'll be other opportunities. And all of this price action, this is it's the same price action on higher time frames. It just on the low time frames, why it's nice to watch these lower time frames is because price action moves faster. But it's not for everyone's cup of tea. Just what I think of sell for around 1809.6 as a previous resistance. Yeah, I've got this zone. As long as nothing's closing above here, I would say that you're pretty safe looking for sells. But with every sell, always mark up when you think, when I'm wrong on this trade. And that would be if price is really comfortably closing above here, like push up, don't mind if it does that, but closing above a second break, I'd say I'm wrong. Problem is though, if you look for areas that are so high up here as well, price has moved a lot already today. So when price moves a lot, then it just gets harder and harder to keep on pushing up, and it's less likely you get into that trade. What do you guys think of the swing ideas yesterday? Yeah, I think that's the plan. Yeah, the links in the Discord, right next to each other. I created a new folder in the Google Drive where I'll just keep all those outlooks. Yeah, euro went up. Oh yeah, yeah. Hmm. Well, it makes sense because what we're saying. We're like for anything, it would make sense to have like at least a pullback. So whether this keeps on going up really going to depend on the yen. Hmm. It's moved a lot. It's moved from the low to the high already 135 pips. Yeah, it sucks missing that. You could have all these best laid plans, and then the gap just screws everything. You're like, oh, what do I do now? Yeah, nice one. Yeah, yeah, it's pretty hard to that there was that. Oh no, yeah, that was out all day. As soon as we finished, it was I had to get Maddie ready, and then we were in Manchester. Long, yeah, that makes sense. Oh, Aussie's going to be weaker, so I think yeah, Aussie's there's so many cases for Aussie to be weak here. One, you've got just the interest rate differential doesn't help them. Two, if interest rates stay higher and threat of war, there's going to be less money to spend on construction development. So that's going to impact our export sector. So yeah, it's going to be pretty hard for Aussie to turn it around without global optimism. So yeah, pretty tough. Aussie's in a bit of a tough situation. All right, so the 15 minutes closed. Struggling to break through here yet. We've done the pullback. So we've done the leg up, grab liquidity. We've done the pullback. Now we really need to see something fail to close and start breaking structure to the downside. So whilst we've got like that little pullback and we've got this wick low here, we're still contending with the volume from this big candle. We're getting good signs of it. But is this just, it's holding here? We could just do, we need to wait and see. Paul, did you find that link? Oh, okay. Yeah, okay. So can you see my screen? Here. This is the link straight to it. Break. Yeah. Break. 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 Ivan, similar to Wednesday's price action, but today we have no wick on the UK open. Can't see any manipulation in the lower time frame. From the upside, Ivan, to suggest going down further. Yeah. Oh, you mean, remember? Yeah, that's what I think you're saying. It was that day, wasn't it? When I was like, I was pretty confident. And which day was it? Last week. London session. Where's? I think it was this one. Yeah. It was Monday last week. Oh, it was. Yeah. Exactly a week ago. Real nasty when I was like, no bottom wick. Yep. Trade down to it. And the thing never came back. And then again today, no bottom wick, straight up. So last week, which was a bit annoying, was Monday, Tuesday, Wednesday, Thursday. If London went up, it eventually just kept on grinding higher. Had pullbacks along the way, but it just kept on grinding higher. It never did a up to like a proper buy to sell. And then Friday it did. What are my thoughts on NASDAQ? I like to trade that in New York, not London. London gave a good move last Friday. But most of the times, I'll show you. So most of the time, most of the volatility comes in the New York session. So I prefer to like just see what London does and then let New York bring the volatility. But last Friday we had a really great move down, which is a bit of a shame to have missed. But it's just such an up and down affair. So I'd be leading to, well, because of the buyback window being closed and with this threat of war, I would also be leaning to sells. One thing though I can't comment on, because I haven't looked just yet, is the order when these businesses are going to be announcing their earnings for Q1. If there's some, like we could get some surprises. Let me just bring this in another window to the side, but I'll see what's on the calendar. Because if you've got like a bunch of companies that in the NAS and they announce some earnings before market open and they come in really good, then we could see NAS rally up higher. So I need to hold my comments on NAS until I know a bit more. But overall, NAS is kind of struggling to for the last like couple of weeks. It's really struggling to break up any higher, but it's kind of as expected because it's been on a tear lately. All right, so today there's a lot. I'm waiting to make sure that this high is not going to be broken close above. All right, you see over here on my screen. So we've got today, April 15th. We've got Goldman Sachs to release their earnings. We've got Charles Schwab. We've got a bunch of smaller ones. But yeah, HDFC Bank, Goldman Sachs, Charles Schwab, M&T, Equity Lifestyle, Properties. And then the market cap gets a lot smaller. So pre-market, after hours, time not supplied. So at least the banks are pre-market. So they should come in like towards the end of London session. HDFC, Equity, Grupo, they don't tell you when. But if they, these are the ones that are trading on NASDAQ. So if these guys come in and some of them have some surprises to the upside, then I wouldn't be surprised to see NASDAQ do a little bit of a sweep up first. Otherwise, I'd say that if we get news regarding the conflict, then that'll be a headwind for any potential upside. But it's too early to call. Okay. Cider, are you buying NAS? No, I just mentioned why. Why I'm not. Not in London anyway. I'll trade New York. The reason I trade German in London is because it's much more like you get good volatility for German in London Open. For NASDAQ, just trade it in New York sessions, much better. Morning, Alex. Okay. Yeah, a typical price action that you see is when you get a 15-minute candle closing very bullish with a top wick like this, and then you get an inside candle, usually it fills this wick. Usually. Same thing if you get a strong bearish candle with a top wick, and then you get another bearish inside candle, then usually the whole wick will be filled. And that's why I think like it's super important, especially with these London Opens and that is that this was a very clear area to expect a reaction. And it's just that. It is simply a reaction. It might not be the high of the day or the low of the day or anything else. Most of the time, you'll get a good reaction, first time touching in a sensitive area. And that on German, you can get, 20, 30 pips, but take something. Put it in the bag. Takes a lot of pressure off when you start trading with money you've made today, rather than trying to take a trade and then hoping it was going to be a home run from the first pitch, and then now there's negative emotions because you're in profit. Now it's back to break even. You want to keep it going, and it's just that mess of emotions. It just usually doesn't end very good unless you're really, really confident in the level. If you're really confident in the level, put your order in, turn the computer off. Do I check FDAX? There's a gap in this. Is that useful? What's FDAX? Jay, no, this is German 40. Futures NASDAQ. Sorry, futures DAX. Let's have a look. DAX futures. Where's it gone? Oh, the gap is because there's no Asian session. The futures doesn't have an Asian session. That's why there's a gap. So if you look at German 40 chart, you got the Asian session. The futures, what it's doing is it's just the reason there's a gap is because of no Asian session. I think the Asian session is pretty important because Asian session shows you're going to get price action, and Asian sessions used as liquidity a lot of the time. So I spoke with a guy. If he's watching, hi. Name's Guy as well. And had an interesting conversation, and he was trading cattle, and the chart looked pretty good. So I put live cattle here down the bottom here. It's only open very limited hours of the day as well. Spread's going to be high, but I'm actually interested for swing ideas because I hear a lot of the investing podcasts and just podcasts in general. Some of them really do talk about trading like farmland and cattle and like these other commodities. And look at this chart. So you can't scalp it, but from a swing trade idea, it's actually I'm interested. I need to explore it further. Yeah, I'm gonna have to change. I need a rebranding. Yeah. Cash cows. Mm-hmm. It's yeah, I mean it's holding, isn't it? It really is holding. I think this could be a good sell now. Like breaking of this candle. I'd love to see this candle close. Yeah. You're looking to sell when bias seems to be bullish. Depends on what time frame you're looking. So what if you're looking at this chart? So it's not out of the woods yet. Just one didn't close bearish. I'm waiting to see whether this is going to be broken. That's my real point of interest now. That if this gets closed above, then really not interested in looking for sells for some time. But I really want to see if this is holding at the moment. Would love to see start to create some structure and break into the downside. It's already given one opportunity. So taking the first touch is giving you a nice little opportunity, but price is holding. We're struggling with this volume here. So at the moment, like if you're trying to like just do like keeping risk low, there's good risk reward potential for entering something here and then keeping risk really low. That if it closes above this point, just close it. You know, you're risking like 10 pips. If it does happen to be a top, the payoff for this, even if it comes down to probably fill all of this, to be honest, you could be like on a monster trade and you're only risking 10 pips. Like if it closes above here, just don't hold it. But if you're waiting for structure, there's no structure being broken yet. Everything's still very much so for this current session is very much upside. So we're trying to like, I don't want people to bother trying to pick the top. If you want to take a higher risk entry, I think is pretty high risk. I think there's a good chance you lose those 10 pips. Or even like if you entered now, you're risking like 5 pips. If price was able to start breaking down, then, you know, it would start looking really good. But it's a really dangerous area. I'm only looking for sells, but I'm being super, super careful with my entries. Because if it breaks here, I think we're going to be going up to like this area. And we're going to probably extend. I don't want to hold something and draw down for that. And if this like the second break, we close above here, there's no sells. There's no sells. We've got clean candles to the left. We don't have any reason for price to really turn around here. And I think if it did turn around here, that's really unlucky. All right, mate. Justin, see you. Have a good day, mate. What do you think is the best instrument to trade during London session? It changes. It comes and goes. Sometimes German's excellent. Sometimes gold is excellent. Sometimes the currencies are excellent. But I think less is more in everything. So you don't try trade everything. I like to focus on one thing. There was a time. There's been plenty of times when I got frustrated with German because it's just not seeing the moves that well. And then there's many times that gold just sucks as well. But depends on your appetite for volatility. I think if you're not interested in volatility, then I wouldn't be picking either indices or gold. But I like volatility, and at least with indices, you know what time the stock exchange opens, so you pretty reliable that you get volume and volatility at that time. Yeah, this is looking like it's just going to leg it higher. So we've got clean candles over here to the left. So there's nothing going on. This closes. It can close above. The sells are dead in the water for now. Yeah. Looks like it's just going to keep on making its way up. I don't want to switch to there's a good chance price just continues going up. So if you are looking to long, I don't recommend it. I think on lower time frames, you're better picking a direction and just try to work on your timing. If you're looking for sells, I think it's a bloody difficult place to look for sells now. If you're looking for longs, I think there's a good chance it continues up now to the next level. Having broken above, we've had the push, we've had the sweep, and now we've closed above the high. I think it confirms those longs for a bit. So if that was in line with your bias, then I think you're onto a winner here. And 5 minutes until the close of the hour. Yeah, 15 minutes. Looking lovely bullet clean candle. So it just ate away. Never broke structure to the downside. Next zone. Maybe another 13 pips higher. I'm not taking any longs. But don't just because I'm not just because I'm not doesn't mean you shouldn't. The reason I'm not is because I don't like changing my bias. Yeah, so I'd rather stick to the same. Personally, I like to stick to the same bias and then wait for price action that's in line with it. I think it's yeah, I think it's just very dangerous given everything that's going on. Because the reason I'm looking for sells was my reasoning for fundamentals. And the thing with fundamentals, though, which is annoying, is that they don't tell you when. Tells me that there's a chance that equities are going to have a really difficult time to continue the strength that it's had for the last while. And we've seen, price coming down. No, yeah, I still think it's liquidity gathering, based on the 4 hour, because we never actually close below it. That's the problem. So, yeah, never closing below it. is a problem. All right, well, it's 9 o'clock. So Zoomers, stay on. I'm going to close the YouTube streams though. Okay. So appreciate you guys. Good luck today. Trade safe. Don't over risk. Don't over trade. Really focus on your plan. Okay. If you want to hear, wait a second. My YouTube, stay on for a second. Trading Nut. I'm going to close this one down first. If you want to support my channel as well, then you'll find me on HaydosFx on YouTube. Okay. Make sure that no matter where you're watching it from, if you guys like it, give the channel, give the stream some support. It does really help. Okay. And I'll see you guys later.